It is the ultimate debate in wealth building. Should you invest your money in the stock market or in real estate? Both asset classes have minted millions of millionaires over the decades, but they offer very different paths to financial freedom. Today, we are breaking down the pros and cons of each and looking at what 2026 holds for these two titans of investing. Let's start with the stock market. The biggest advantage of stocks is their incredible liquidity and low barrier to entry. You can buy fractional shares with just a few dollars, and if you need cash, you can sell your portfolio almost instantly. Historically, the S&P 500 has returned an average of about 10% annually, allowing investors to harness the magic of compound growth. But the stock market is not for the faint of heart. Its biggest drawback is short-term volatility. Prices can swing wildly based on economic news, interest rates, or geopolitical events, often leading to emotional, impulsive trading decisions. Now let's look at real estate. Unlike a stock, a property is a tangible physical asset that you can see and touch. Real estate provides two powerful wealth-building forces: long-term property appreciation and consistent, passive rental income. Furthermore, real estate is widely considered one of the best hedges against inflation, as property values and rent prices tend to rise along with the cost of living. However, real estate has its drawbacks. The barrier to entry is high, requiring substantial capital for a down payment and closing costs. It is also highly illiquid. Selling a property can take months. And unlike stocks, being a landlord requires active management and ongoing maintenance. So, what does 2026 look like? For stocks, analysts project continued growth driven by corporate earnings and the massive boom in artificial intelligence. For real estate, the 2026 market expects increased commercial investment and strong demand for single-family rentals, though high interest rates remain a hurdle. The truth is, there is no single better investment. It entirely depends on your financial goals, risk tolerance, and how hands-on you want to be. In fact, the most successful investors don't choose just one. They build a diversified portfolio that leverages the high growth and liquidity of stocks alongside the stability and cash flow of real estate. If you found this comparison helpful, please hit that like button and subscribe for more deep dives into finance and investing. Thank you for watching.